Hello, Sheldon. I'm going to make you the presenter. It's been a while, buddy. Looking forward to talking to you, seeing your charts. I made you the presenter.
Dale, can you hear me?
Yes. Hi, Sheldon. How are you?
Doing well. Well, yourself?
Good, buddy. How are things in Patagonia?
Pretty good today, actually. That looks like a nice day outside.
Okay, so I'm waiting for you to share your screen.
Okay,
Okay, that's Twitter you're showing, so maybe we could get some charts up there. Okay.
Yeah.
Beautiful. So Sheldon McIntyre, I've interviewed Sheldon, I think, a couple times on FX Street, Sheldon, or at least once, right?
I believe it was once, yes. Quite a while ago, but yeah.
Yeah, so you're an expat from Canada, and you missed the housing bubble there.
Yeah, I did miss the housing bubble. So
okay, so well, there are millions of bubbles, and I'm pretty sure you have a nice lifestyle in Chile compared to what you had in frigid Canada. Am I correct?
Well, you could argue that in Chile we were in a housing bubble as well, not to the extent of Canada or United States, but
it's global,
we've seen, yeah, prices here have went up a lot in the housing market in Santiago.
Has the currency
that I've benefited?
Okay, has the currency with dollar weakness appreciated down there against the dollar?
Not too much, actually. A little bit, but it's been more of an issue of copper affecting the price down here.
Oh, okay.
Yeah, Chile's the largest exporter of copper, so. So
that's great for the country.
Well, that's one of the reasons when copper was a nice high price going into 2008, 2009, and a significant rebound after that led to the housing bubble, among other things here.
Right. Okay, so we're looking at S&Ps here. I think that we're getting, we could end up having a decent reversal today. A lot of people are targeting 2480. Our own Steve Volge is short NASDAQ. Maybe the S&P has 2490 on a fib extension. I remember when you and I talked a few years ago, we were prematurely bearish a while ago, so I hope you weren't as stubborn as me.
No, I think the last time we talked was right at or just at the beginning of that slow deceptive topping process that began in the end of 2014.
Right.
No, that didn't really, I've been fine in this in terms of participating in the market. But, that slow deceptive topping process really reconciled itself with that major low in early 2016, and then it's been pretty strong after that.
Any signs that you see technically of it waning, or a lot of the Super Bulls have targets? I actually interviewed a guy who was looking for by 2020 like 4,200. That's pretty, a pretty bullish target, don't you think? So a lot of people looking for 26, 27 by year end. Do you think that maybe the fourth quarter may finally bring about? It's been such a long time since we've had a 10% correction. Is the market vulnerable? And what are you trying to say with your interest rates? We're at 5,000 year lows.
No, it was great. Was the first chart that actually comes up in that particular file. But in terms of the S&P price targets, I don't really fixate too much on doing price projections for the market. I think I told you the first time I met with you, and I actually, if you go back and look at my Twitter stream or stock tweets, you'll see that I was actually talking about a secular bull market in 2011. That's where I started becoming pretty bullish on the market. I'll just bring up my S&P file.
So, I mean, with interest rates, we're at 5,000 year lows. So that means that even before Abraham and Moses' time and the Pharaoh's time, we were getting cheaper money to build condos than the Pharaoh was to build pyramids.
Yeah, pretty much. Yeah,
that's pretty amazing. That's
and we could build the pyramids. There was enough labor available.
Oh yeah, labor, right. You didn't have to go, you didn't have to outsource labor. In fact, it was probably aliens that came down and gave them the technology to build the pyramids. Anyway, that's another.
Well, that's what my 11-year-old daughter tells me. It was aliens. So
really, and she might be right. You know, the wisdom of the young.
You know,
so.
who knows?
Okay. So what are we looking at here? You have some bands up here, and
yeah, just some envelopes. Moving average. This isn't the best chart, but you'll see here. Really, 2011 is where I figured that was it, and that we were beginning of a secular bull market. You'll see that for me, the key moving averages on a long-term basis are really the 200-month and the 200-week. And usually, when you have a secular bear market like that very quick one, 2008, 2009, you'll see indexes come down or even drop below the 200-month and then rally into the 200-week, sort of a dead cat bounce or a cyclical bull market like we saw into 2010. You'll see it stopped dead there in 2010 at the 200-week. Once we got above and we spent basically the third quarter of 2011, you'll see there how the market basically, I think it closed only once below the 200-week, and then it was from there we really took off.
Well, in 14 and 15, we were hitting those upper bands. Where are they coming in now? Your chart doesn't go unless you could bring it down. Do you think we're going to go for those? Do you think we're going to go for those upper bands that the market was tagging in 14 and 15, 2014, 2015?
Well, yeah, I don't know if we're going to get there in the short term. I think in the long term, like going out, 6 months, going into the end of the year, I don't see why that won't happen. I remain a secular bull, and actually a lot of people are talking about breadth. I've noticed in recent days deteriorating. I really don't see that in the market. When you look at it from a longer term perspective, I just wanted to, bring up briefly the monthly of the S&P here. When I'm talking about the 200-month, you'll see here in 2002, we came down, but not quite, and then we really undercut the 200-month. So that tells you just how washed out. We've only seen that basically one other time since 1945, and that was back in the reset in 1974.
Oh yeah, where it took like 20 years to break out over 1,000.
Yeah, you'll see there, and then once again you're going to see the 200-week come into play, 200-week coming into play, and that's telling you it's getting support and the market's resetting for the next bull market. And of course, that's what we saw take off through there.
So you think that? Don't you think it would be a natural thing and really wouldn't change the bull market if we someday pull back to that double top you have up there that was 58% above the trend line and 137? That's like the 1550 level, and that would just be testing a major breakout. But you don't see that in the cards anywhere in the future, anywhere in the near future.
No, I think that if anything, we'd be looking at max the low in
last year, the election low, 2030 or 1800.
Exactly. Okay. Why is that? Simply because one of the things that I also look at, and that's very interesting, is that the election low in November actually turned out to be a bullish outside month. And a lot of times, not all, but a lot of major bottoms are defined by a bullish outside month. You'll see here on the S&P chart I have how many times you've seen that, the little pink exclamation marks, how many times you've seen bullish outside months come into play.
Yeah, okay? Nice. And
you'll see. So that for me, if we get below there, then obviously we're going to go into the 2016 low, but I just don't see that happening. That would be a major stretch at this point. And one of the other things that's interesting about something that I picked up a while ago, it's not something that on a yearly basis, if I can find, I have so many charts here, it's kind of insane, but we had in 2015, we had a bullish outside year, which is only, I believe, the third time in history we've had that on the S&P.
What year was that?
in 2015, sorry,
Okay.
or 2016. That's
Okay.
my bad.
Yeah, that's a big candle, a yearly candle.
Yeah,
Interesting.
exactly. Yeah, which has only happened 3 times. You'll see here. Here's the chart here. You got to go back to 1935 and then again in 1982. Well, 1982, you know what happened? It took off. And you'll see there again, there's the third. And this is something from Citibank that talked about, you know, the gains that followed that were 28 and 17% respectively. So you can, so look, and then it was actually 7 years, then proceeded to post another 7 up years in a row. So, you know, I'm not, that was in 1982, following 1982. So the potential for a further upside is quite significant if you look at it from that as a precedent. And that's actually the historical precedent that also framed my move to a secular bull market in 2011, that there was a lot of symmetry with what took place from the late 1960s into 1982, and you can see that again from 2000 across. I mean, it's not identical, but there's a lot of symmetry there and how the moving averages played out. As I mentioned, the longer term ones. So
you haven't lost your Canadian accent, the way you said out. You haven't lost it, buddy. So let me ask you this, Sheldon. I know that, you know, this is your main focus. What are you looking at inside the market? Are there any sectors, like oil's been under pressure, any commodity markets within there? And perhaps what's your take on what's happening with the dollar being under pressure, if you think that's cyclical or secular? And obviously we know what you're looking for in S&P's, an ongoing bull market with fairly low probability of some type of correction, but nothing to interrupt it. So the dollar, the main shift this year that I've noticed has been the dollar bull market coming into question. You have any views on that?
Well, at this point, I would not define it more than a cyclical pullback within a secular bull. And why do I say that? If you bring up the weekly chart, you'll notice that the spot on the US dollar is just about at the 200 week. So when I'm looking at all markets, whether it's commodities, currencies, or equities, and even to some extent the treasury markets, you can see the play in here a little bit, but what happens is, like I said, it comes down or undercuts the 200 month, and once it gets above and the 200 week is turned as flat or to the upside, you're in a secular bull. So at this point in time, this pullback, for me anyways, is still defined as a secular bear, if you want to call that a secular bull pullback. I would suspect that we were going to see some strength coming into play. You'll also see these lows also
right, 92-ish, maybe that's when I think there'll be a pretty big capitulation of the thesis of a bull market, and the dollar would be closest under 92 probably. And that's your 200 month moving average there.
This one here is the 200 week.
Okay, because the euro actually touched its 200 week today.
Exactly. So did I believe the Aussie dollar also.
Canada hit a 200 week low the way we have it paired here, USD CAD. You showed like CAD in a futures chart, so we're almost there for you there too. Okay.
Yes, we are, and the only one that's really far from the 200 week at this point in time is the pound. Is way underperforming. Yeah, you will take a look at the weekly on the spot here. You'll see that it's still got a long ways to go.
Oh yeah, to go to 47. Or is there something sick about cable?
Excuse me?
There's something sick about cable compared to Aussie and Euro and everything. It's really been the relative weakness. So you think it'll get up there?
But you'll notice here in the monthly, though, we did get a bullish outside month last month. So that low of June would be, if you were to go long, that would be your stop there. If we
Okay.
blew through that, then you would be going back down to the 120 level again. I've been watching it closely. I think that it has printed its a major low, but as with all the things that you know undergo a major decline in a rapid manner, like you've seen here, there's a lot of price compression and that has to be reconciled, and it probably will see this before you'll see something meaningful develop on the upside.
I mean, do a little work sideways, but the low's in. That was
Exactly.
it. Okay.
Yeah, there's, you know, as you know, Dale, I mean, you're a long-time market practitioner. You know that when you have these rapid
don't remind me.
Hey, I believe in experience, my friend.
I know. You can't learn it. You have to live through it, don't you?
Exactly. So, and you'll see in the long-term momentum here, you're almost going to get across. So we'll see how that plays out.
Okay. Anything?
And then of course,
go ahead.
Well, you mentioned that. I'll just bring up the Chilean peso to the U.S. dollar pair here, and you know, just to give you an idea.
Do you trade it? Do you trade it? Do you convert to, say, for example, your cash holdings? Do you convert your cash into what you believe is going to be the strongest currency? Or
I actually, well, I mean, here this is the U.S. dollar Chile peso pair, right. So you know, I was long the dollar versus the peso, and here we'll see that it got strong support off the 200-month there, and you'll also note there's a lot of historical support resistance at 550. So once that took off, then there was a play there, but I was out up in here. So
okay. So how about the Mexican peso, which has been a pretty wild trader with, you know, the elections and then things coming back? I'm interested in your view here.
Well, you know, I don't follow Mexican peso too much, but you'll see here there's a topside trend line that comes through, right. And it stalled there, and now it's coming off. That's the monthly chart. On the weekly chart, let me bring it up here. I haven't looked at the weekly in a bit.
Community noticed that Sheldon uses a telescope in making decisions. You know, we've seen mainly weekly and monthly charts to get the feel and the rhythm of direction in the market. And I think you need to use, even though I talk about hourly charts like I did today on the S&P, you really can't trade long term. You can't have a view unless you get away from your microscope and use a telescope. So
yeah, well, you know, I use daily as well, and I do occasionally when I do stocks, I will go down to an hourly. But you know, one of the interesting things is because of, you know, the declines we've seen in currencies or commodities and what we saw previously in equity markets. I mean, these were generational collapses in which, if you don't go back and take a look at where the support, where the resistance are, where is this situation in terms of bottoming, I personally can't do it without a weekly and monthly chart. And then from there, I kind of build up my working thesis from there. I mean, you can see the same when you go to the commodities. In some ways, it's even more visible.
Well, you're reading my mind. You know, the oil shares have been some of the weakest. What are you bringing up? Oh, Baltic Dry Index. Okay.
No, that's just the first chart that comes. I'll bring up I got the W2EI chart here on a monthly basis. And once again, you know, you can see how you got to go back to 1990, that 41.15, how important it was back in 2008, 2009, and then once again here it just touched it in June, pretty close to it again. Right. So, you know, this is a whole part of bottoming process, and if you could take a look how far it fell below there, I mean, that is just massive. So, you know, so I don't know.
Is that constructive looking to you, or it's a stand aside, wait for more evidence to develop before you would really have an idea? You're probably a pretty big believer that we're not going to see 2605 again. Is that correct?
Yeah. No.
Okay.
I just don't see that happening again.
Okay.
That happened again, then I think we'd be looking at a global economic meltdown of some proportion. So, okay. And then you might see at least some global financial stress as well.
All right, so you think that oil, that could be, everyone's pretty complacent. They were sure nervous last January with what was happening to high yield debt and the oils and the MLPs. So you think that if there was some type of bear market and we took out those lows or challenged those lows, that could be the catalyst for problems with deflation.
Yeah, and not only that, I think that you'd put the Middle
Eastern currency and
and just the debt situation, the pegs that exist in the middle, currency pegs in the Middle East. I mean, everything would be under stress in that part of the region, and they're already under stress.
They are
in terms of So most of those countries have they're pegged to the U.S. dollar, so it'd be interesting to see how that plays out. This is the weekly chart. Once again, it shows the 41.15 from 1990. But how I see really with oil is that you'll notice that there was a clear, move and price compression and momentum. You'll see it only matched on these two other times. So it's only natural we saw this, and it's followed a very clear rhythm along the 40-week moving average there. So we get above there and get above where I have 7 labeled, which is about 52-ish.
Yeah,
we could rally
up 62 at least, right?
I think we could rally up 60 to 62. That would be, and
that
probably
would help the market. You think it could be war driven? I know some guys that are thinking that there could be some conflict in the Strait of Hormuz, and part of this Qatar thing is setting it up.
It's a good question. At this point in time, the Middle East is probably it's one of its more tense situations we've seen since 2001, 2002, I guess. And I was thinking about that yesterday, actually. What is the trigger that we're going to be looking at for some pullback of note in the equity market? And I keep coming back, well, we haven't seen a major geopolitical event take place that's resulted in conflict, and that just might be the trigger for oil, rising, but also for equity markets maybe to have that serious pullback that people have been looking for a while.
Yeah, unless
that's all speculation. So
yeah, I know you can't trade on it, and who knows? Everyone thinks that that it's impossible for there to be a conflict with North Korea. It's unimaginable because of all the casualties that would occur with Seoul being across the street.
Yeah.
But I've been reading some things that it's possible. It's not, according to the generals, it's not unimaginable. So they said what's unimaginable is North Korea having the capability to hit the U.S.
Yeah, no, that's first of all, the United States has the capability to take those missiles down electronically if they want. So
yeah,
I mean, there's nothing sophisticated about North Korea in any way. I think the most sophisticated thing there is their propaganda machine.
Yeah. How about gold, Sheldon? As long as we're talking about this, it's had a better pattern than crude. I'm wondering if you're constructive on it with what's happening to the dollar. And a lot of people think the stock market and gold can't rally together. It's kind of a hedge for a stock market decline, but they could both go together, can't they?
Yeah, they can. And bring up the weekly here on gold. You'll see it's now. You'll see the 200 week has flattened for the most part, and now gold's consolidating along there. And this particular line, I believe, goes back to the 1980. We pull up the monthly. This horizontal line goes back to 1980, if I'm not mistaken.
So, do you have a site here on stockcharts.com? Are you on? You're on because your charts are showing up here. Where people could go to stockcharts.com to see your work?
No, they're not. No, they're
okay.
They're not visible to the public. Yeah, it's the 19. Sorry, it's from 2008. That high. So when you go back to the weekly, that's your support level as I see it for gold. I personally.
Where was that last chart? That was okay because you were showing a longer term chart.
Yeah.
And the high in the last bull market was 880. When the U.S. When Russia invaded Afghanistan, and that's kind of could be, if there's a bear market, a natural point for it to go back to a previous bull market high. But it looks constructive, doesn't it?
Yeah, it does. And also another thing that I look at is the Aiden sisters. They have these 8 and 11 year.
Aren't they in Chile too?
No.
They're in South America. They're in Costa Rica or somewhere.
Yeah, I believe they're in Costa Rica, if I'm not.
God, I haven't heard that name in a long time. That's a walk down Maryland memory lane.
Been around for a while.
Yeah, that's good.
And they're looking at their gold cycles. So if you look at that, we should see a high around 2019. And then we'll go through another pullback. You know, cycles are never a precise science, but you know, these have worked pretty well since the count started in 69.
I've never heard of an 11-year gold cycle before, but there have been some major turns on it. Interesting.
Yes.
And a 7-year low, 8-year low, and 11-year highs.
Yeah.
Okay. So
there was one, obviously. You can.
Go ahead.
No, I was just going to say where I'm actually a little bit more constructive on. Yes, you're reading my mind.
Yeah, because the gold silver ratio looks pretty constructive.
And look at this bullish monthly reversal off the 200 month.
Yeah, I mean that was. Yeah, they had a few flash crashes to try and clean out all the longs, which they did, making new lows for 2017, and then now we know that 14 level or just below the 200 month is major support. My partner Stelios is glad to hear that. What I'm hearing, potential targets of about 25. Is that reasonable, or do you think we can make new all-time highs?
Well, all-time highs is, first of all, we got to get above the 200 week. And then from there, I'm going to be a buyer of it. From there, I was on vacation till this week, so I would have liked to have participated on some of this move already. But yeah, I think silver's about to make the turn above the 200 week in some kind of weekly type pattern or bullish outside week, and I'm a buyer. As far as getting back to 49.50, yeah, we'll have to see how it plays out. That's a pretty big move.
But 17.5 is going to be your trigger over that moving average.
Yeah.
Okay. So Sheldon, I forgot. Do you have any kind of service that you offer? Are you managing money? Are you? Do you have subscribers to your work? Do you have a website? What's your business model?
I manage my own money and a couple other people, and that's it.
Okay.
I don't have anything to ascribe to at this point, no.
Okay. Well,
that's a tough business model.
Yeah, you have no axe to grind, so I want to thank you double for coming in here and sharing your work and updating us on your views. Anything you want to wrap it with?
No, I can't think of anything really.
We covered a lot of ground.
Yeah, definitely have. I would just only add that I'm extremely bullish long term on the new China versus old China. I really think that there's a multi-year move developing now in new China stocks like Alibaba, etc. Okay. I also like SoftBank out of Japan. Actually, I should bring up Japan if I may, just for a second. I think it's probably the most interesting long-term chart out there from my perspective. It could be, Japan, actually the Nikkei could be setting up here for a major move.
Okay.
This is the 200 month, and you'll see here it's right at that 20,000 level, which has been a stubborn price level, but this is like it's maybe a little too deep to call it a head and shoulders bottom, but if that goes, those highs from the late 80s are going to be hit moving forward.
Interesting look. Maybe one more pullback to 14,000 before that happens, or you think that could be no more pullbacks? So,
not that far, because once again, this is my reasoning. You'll see we've already had a successful test of the 200 weeks, so it's now or never for it, I think.
I got you. Now or never. Great song, I Do It, by Elvis Presley. So We'll wrap it up. My trading warrior brother, Sheldon McIntyre. People could follow you at HERT, H-E-R-T Capital on Twitter. And what a pleasure to hear your voice and your demeanor and your long-term telescopic views. Thanks so much for edifying our community today, buddy.
Well, thank you, Dale, for the invite, and I hope we can do it again, and best of luck and success with your endeavor here. So
thanks so much, Sheldon.
You're one of you're genuine guys in the business. Very few of them left.
Yeah, I almost wasn't left 3 years ago, but still, I'm still here, and I appreciate the compliment very much, Sheldon. And you know, my mission is just to build up people and build up traders and help them avoid the landmines I've stepped on. So it was great talking to you. Why don't we plan on sometime later in the fall getting back together and seeing if the Nikkei broke out and some of this stuff manifests.
Sounds fair.
All right, Sheldon. Thank you so much, my trading warrior brother, Sheldon McIntyre. And you could follow him at HERT Capital on Twitter. Thank you, everybody. Have a great day. We'll wrap it up with TGIF tomorrow. Thank you, Douglas. Glad you enjoyed it. And most of all, besides clicking the link to become a subscriber, glad you enjoyed, Kevin. Don't just count your pips, count your blessings. See everyone for TGIF tomorrow.